What's up, everybody? It is Trader Dan here. It is our first video for the new year of 2022, and today we are going to cover psychology and handling the emotions that come along with trading. I think it's a very important topic to cover, especially with how the markets have been trading so far this new year. And so we're going to go ahead and dive in here into the psychology of trading. So, first, talking about emotions, right? There is fear involved, there is greed involved when we're talking about trading. And when we see the fear side, what we're seeing for the most part is people afraid to put on the position. They're afraid to put on their trades. And this could be because they've lost some trades and they felt that emotional pain that comes along with losing. Or in some cases, what I've found is some people are just not accepting their risk mentally. And they think, oh, I'm going to risk $500 on this trade and I can make 1,000. And that's good risk reward. But if you are not comfortable risking that amount of money, then you're going to be fearful in placing your trades, no matter how good the setup, because mentally you are not capable of accepting that risk. So that's why we have here, am I accepting the risk? Is this position size too large? Am I putting up too much money up front for this trade? Should I be trading micros instead of minis? All those types of questions. A lot of the times I'll find people that they'll be trading minis, not doing so well. Then when they go down to the micros, all of a sudden they're doing great because they are not feared or they're not fearing the money involved in the trade or losing the money involved in the trade. So am I scared to lose money? Am I scared to be wrong? That's also a factor. People want to have, win rates of 80%, 90%. The reality is, for me, I'm usually 50 to 60% correct in my trades. I only win 50 to 60% of them, but the risk reward is really good and I play my edge how it is, and that is what allows me to continue to trade, day in and day out. So, sitting out of trades, even when valid according to the rules, some people, because they are so fearful of losing money or being wrong, they will actually, in their headspace, be thinking this is going to be a loser before even placing the trade. Even when they're following their rules and according to their rules and their edge, it's a valid setup you should be taking, they're still going to sit out. So, fear can certainly lead to missing some opportunities with the market, and if it's not handled correctly, it can lead to even worse trading results and performances. So greed, on the other hand, am I overconfident with my risk? I can't lose, I can't be wrong. And sometimes you hear that when the market's going really well, everybody is, just riding the train basically until that bubble pops. But, am I blocking out what I don't want to see? Meaning that, am I going to trade, say there's long setup after long setup, I'm going to keep trading these, and then one long setup comes along, and look, there's this short that's opposing. Maybe I should sit out of the trade, or maybe I want to flip the trend. But instead, I continue to go long. I'm not seeing the other side. I cannot see it because I'm so focused and I'm so greedy on continuing to trade the trend, even when it may not be the current trend in the market. So most of the time, they can't see an opposing trend and opposing trade, and that can lead to more losses, obviously, or just not a healthy emotional state for trading. Taking every trade setup, even when it's not valid according to the rules or we're not following our edge, we're taking everything that we're seeing. So this is kind of the opposite of fear, but it's just as bad because now we're placing trades, with no regard really for the risk in some ways. So that moves us into consistency. So I always like to think that consistency in life can lead to consistency in trading, and same for the other side. Inconsistency in life will likely lead to inconsistency in trading. So if you're struggling in your personal life, whether it's money problems, maybe you got laid off from a job or you're transitioning to a new job and so you're very busy with that, relationships, all of those components in our personal life can affect how our trading results are, right? If our life is kind of inconsistent right now and we're really scrambling to get everything together, then trading probably isn't going to go so well when our personal life is also inconsistent. But when you have consistency with your life, you're on a schedule every day. Maybe you have a job from here to here. You're going to do that. You have relationships that are healthy. In that case, you have the mental space to be consistent in trading, and that can help translate over into trading when you have that consistency in your life. Moving on to randomness. This is a really important aspect about the markets in general that I think a lot of people should learn about, especially if you're first starting out or even if you've been here for so long. But chances are, if you've been here and trading for a while, you likely know this. The market is random. Anything can happen. Expect the unexpected. Only certainty in the markets is that everything is uncertain. I love that quote. That's from the Mark Douglas book, Trading in the Zone. Only certainty in the markets is that everything is uncertain. Wins and losses are random. right? We can take valid trade setups, we can take our edge, but we cannot control wins and losses. We could take the best trade setup according to our rules, that can still lose. So that's kind of what we're talking about here. Wins and losses are random. Each individual trade is statistically independent of each other. So think about flipping a coin, right? It can be heads or tails. If I flip a quarter right now and it's heads, then what do you think is going to happen next time? You might think, oh, it was heads this time, it can be tails next time. It could also be heads again, right? On that micro, it can really be whichever one. It's independent. Every single flip is independent of the previous flip. So it doesn't matter. If it's heads, it does not mean it's going to be tails. On the macro, the bigger picture, we know that after 1,000 or 5,000 or 10,000 of these flips, it's likely going to be about 50% heads, 50% tails. That's what it's going to be. But on the micro, we cannot control each individual trade, or in this case, each individual flip of a quarter. Now, we cannot control what the market does. This is where most emotional issues begin. A lot of people come into the market believing that their strategy, it has to work, it has to be right. And I think people, for this reason, will basically scratch risk reward and look for trades that are going to win 80% of the time, 90% of the time. That is a red flag to me, because if you're winning 80% of the time or 90% of the time, your risk reward is probably awful. You're probably risking 10 to make 2. And you don't want that, right? You want to be risking 1 to make 2. You risk 1 to make 3, 1 to make 4, etc. You want really good risk reward that allows us to have losers in our edge, basically, and still be consistently profitable. So again, we cannot control what the market does, and this is where most emotional issues begin. This is a big problem, and you want to focus on that risk reward. It's okay to have losers. Like I said, for the most part, I'm 50 to 60% with my trades as far as winning goes, but that risk reward is key. Being able to risk 1 for 2 at the least is really, really helpful in that regard. So honest reviewing. Am I in a healthy state mentally and emotionally to be trading, right? Is there a lot going on in my life? I should take a break. Am I trading this week and maybe I've had 3 red days and things just aren't going right? I should probably review and see what's going on. Am I really taking these bad trades? Am I just not in it mentally right now? Those are all things that we have to honestly look at ourselves and say. And it's different, right? Because we don't really have a boss. We are our own boss when we trade, unless you're trading for a firm. But most of us here are retail traders trading for ourselves. And so when you are your own boss and you're in charge of you, you have to be very honest and capable of doing this to yourself and checking in whenever you have a series of red days and making sure that you are still on the right page mentally to be doing this. Am I following my rules? Am I executing trades on valid setups, right? So it's important to be following our rules and following our edge, because we don't want to be taking trades that aren't valid. That's not good for the long run for what we're doing here. We want to take trades that are following our edge and that are valid. And if they're a valid setup and we follow our rules, we don't want to miss those trades either, right? We don't want to sit out and say, oh, I think it might lose, I'm going to sit out. You want to be able to execute on the trades that are valid. That is being in the healthy mindset of trading. So reviewing trades, I always like to say a good trade can be a loser, and a bad trade can be a winner. So a good trade for me is when I follow my rules, I go for my edge, I execute the order, and I follow it as I should. I leave my stop where it is. If it moves X amount of ticks, I can move my stop and start to trail it. I have a target. That is a good trade. Whether it wins or loses, as long as I follow my rules and execute a valid setup, that is a good trade. A bad trade can be a winner. I might just disregard my rules and say, screw it, I want to get into the market, hit the buy button. Oh, it went up 10 points, I made some money. But that's not a good winner because we're not following a system there. That's not going to work out in the long run for my edge. So we want to build good habits that lead to good trades. And again, for me, a good trade is following the rules, executing valid setups, and everything there. So that's just, I think, the simplistic view of psychology in trading, right? Just handling those emotions and what we as traders go through, and being able to accept a lot of these in our trading is what's going to allow us to be consistently profitable and continue to grow in our journey. So I hope this helps. If you enjoy this, please like it, share it, subscribe, and I will catch you guys in the next video.